still in control. Mix some mud in my cup with the mud in my soul. Still you know how it goes, like I'm never alone. Still I came with the ghosts and it's all over my shoulder. Like peeking through the window and it's making me colder. I could treat it to the night, wish it never was over. We the deepest in the gut, phones never could close up. We got everything we like, but we never got close. Wait, don't you ever expose us. I see vipers and vultures, say it's all
It seems these days are getting longer, man. This world is bound to burn like the bomb that I just wrote. We're having trouble finding purpose. What's the point in evolution if our people don't converge? Roll the charm and talk it out. War is hell, this blood will spill until we learn. We're just a spit. The meaning of death that cannot be obtained. There is no definitive reason. The demon is something that lives in your head. I promise it's
All right, guys, what is going on? Hello, welcome to Market Maker Monday. Welcome to the live stream. Hope you guys had a fun weekend. I definitely did. You know what I mean? It's been a fun day so far, too. I want to talk about dollar index, right? I'm going to get to that, mod. Just give me a second. Why do you think I use the name Market Maker Monday? Because we will be looking for what? Market Maker models. Ooh. Shocking. So I'll show you a couple things on dollar, give you some ideas. You know, we'll have a good time. All right. Let me open the chat today. I always forget where that's at. Subs. A minute. Okay. Chat is subscriber mode today. Right? So what's really cool is, yes, it was dude, I was so tired last night when we finally got it. But it happened last night, baby. That big 10,000 subscribers, baby. Look at that. It only took 8 years. It only took 8.5 years. But we did it. I appreciate every single one of you. Even the ones that come on here and don't ever comment. You're just like a phantom member. Phantom members. But it's all good. I don't care. I mean, I do, but I can't do anything about it, you know? So, what's good, 2020? Oh, God, these names. MJ, Ibrahim, Jorks, Anwar, welcome to the SMS membership. Jim Bob, Harmon, Cyber Snake, welcome. Convicted Capitalist, Marvelous, Rich off the dip. I don't even know what that mod. I'm going to just say mod. That's easy. Civic, what's good? Jackson, what's good? DJ, Bonnie. Hello. So, yeah. Thank you all for 10,000 subscribers. Much appreciated. When I got here without each and every one of you. All 10,000 of you, technically. So, thank you for that. So I got a special gift for you, man. I got a special gift for you. I'm just debating on whether I should give it to you today or make you wait. What do you think I should do? What do you think I should do, chat? You think I should give it to you today? Or do you think I should make you wait? You let me know in the chat. Do you want it now? Or do you want it later? Now, I think it's special. I mean, I think it's cool, but not everybody may agree. Everybody might not agree. Let me talk about the dollar real quick, because I want to give you some notes. Yeah, that's fine. Okay. So I want to show you before screenshot real quick. That's not to say I told you so or anything. obviously I want to teach you some things. So I know a while ago, thank you, Tang, I appreciate it. A while ago, I taught you how to trust equal highs or equal lows. Do you guys remember any of that? Because normally, right, a couple years ago when I put out the top 10 smart money trading rules, that was for beginner to intermediate traders. And I said, look, if you want to be on the right side of the market more often than not, then simply don't short when there's equal highs, don't long when there's equal lows. Okay? Now, that rule, although I think it's a good rule for most traders, once you get more advanced, that rule no longer serves, I guess, the same purpose. It doesn't have the same, I guess, weight to it. So what I mean is, as a beginner, I don't think you should. Okay? I don't think you should short when there's equal highs as a beginner, because I would want people to get into the habit of targeting equal highs as a target. But now in this particular case, I just have a line going lower. And I'm screenshotting basically just this idea that, hey, you know what? Right here, we're bearish. And we should trade to this low. Now, I took a second one saying, I don't know what we're going to do there. Okay? After that, we could reverse to trade higher. Or we may continue lower. I don't know. Okay. I don't always know if a particular high is going to be a reversal or if it's going to be a continuation. Okay. I'm pretty smart. I'm not that smart. Okay. Now there are tools that will help us determine, like, okay, is that going to be a reversal or a continuation? If we go to, we really have almost like no reference points for the dollar index. And this is part of that reason why. We go out to the weekly and this is trash. This is trash, right? This is so weak. This is garbage, right? So there's not a lot of reference points to the left. You know what I mean? We go to the daily. And if you remember a couple weeks ago, after we took the low of April, back in here, I was saying, look, if we start trading in this direction, we're probably going to go for those highs at 99.40, right? What did we do? We eventually got 99.40. So working within that range, working with reference points, it's easy, right? When there's nothing to reference, I mean, if you have to go out to a monthly time frame or something, you know, to reference any old price action from like 3 years ago, there's no way that I know of currently that would let me know, okay, we're going to run last week's low and then trade higher. We could do that. Is it a guarantee? Absolutely not. This is trash, right? This is super, super weak. And I don't want to try and, you know, finesse the lows. I don't want to try and finesse the bottom like I did with indices. All right. So what is the point of all this? The point is, if we know with a high degree of certainty that that low is going to be taken, will it continue or reverse? I don't know. But all I know is that we are, with a high degree of probability, we're going for that low. What we do after that, we'll play it by ear. We'll figure it out. Okay? So, oh, that's not what I was looking for. Let's come back to this. Okay? By looking at the 5-minute dollar index, okay, there's quite a few things that we can reference in here. And this is why working within a range becomes a lot easier than trying to work sometimes at like the high end of a range or the low end of a range. That is where you find your low risk buys, but sometimes it's not always that easy. But working within a range, okay, I'm trying to give you some tools here. I'm trying to give you some confidence working within a range. These equal highs, and I did touch on this last week, but I'll teach it again because I know you don't write shit down and you just don't write shit down and that's it. Okay. An idea like this, what you're doing, okay, is not reactionary. You're not reacting. You're predicting. So all those posts on Twitter, never predict. Okay? Garbage. Dog shit. Dog shit. Okay? Yes, you can predict. They might not be able to, but you will be able to. Okay? What we're predicting is this. Okay? If this is going to be a market maker buy model, because we have original consolidation, we have equal highs, right? Either that or low resistance highs, I can't tell, but either way it goes. Original consolidation. So if this was going to be a buy model, what would it need first? What always sets the low? Chat. What's the answer? What always sets the low or sets the high in price action? Especially when it comes to market maker model, sell model or buy model, either one. If we're working with equal highs, right, then that's going to be terminus for upside. So if we're going to get a buy model, we cannot get a buy model until manipulation. So in this particular, this was screenshotted at 10:04, so like 2 hours ago, 2 hours and 14 minutes ago or something like that. So that means currently we are in a what? Sell program. We are in a sell program. How can we tell? We left behind the highs, left the consolidation, traded higher into this, and then what's right here as well? High, low, higher high. That body is lower here, so that's the higher high. This down candle is what? Mitigation. Price just barely trades away from the mitigation on this 5 minute. So what does that tell you? Is that bullish? Do we want to be longing this? Oh, inversion. Do we want to be longing that? No. No, we do not. That was right here. That was right before the big dump. Okay? They say nobody can time the market, right? Nobody can do it. You're right. Nobody. Everybody's just a dumbass, right? Everyone's just a clueless dirtbag. And nobody knows anything. There's that mitigation. We did trade to the high end of it. No problem. 5 minute time frame, not a big deal. Okay, what's right there? It's not in the screenshot because it didn't form yet. These two up candles traded through. We're back into them. These two together. Imbalance right inside of that. Then we trade lower. Right for that low. You see that? Sell side of the curve of a potential market maker buy model. We may not have the low. We may run this low yet again. Again, I don't always know. I'm not trying to predict the low. At least not with dollar. Now with indices, we do have other tools that will help us, and I'll show you that in a minute too. But currently, the whole point is If this is going to be a buy model, fine. But we still have not ran out any lows. So are we ready to long yet? No. This is still in the sell side of the curve, even though it hasn't formed yet, because you're trading inside of it. Does it make sense? What I was anticipating, right? And again, you can always draw this stuff out. And I know it's strange to some people because you're probably not used to it. But hold on, let me go back. Sorry. What I was anticipating was a potential of something like this. Potentially run the low, give us manipulation, then give us all the other stages, so on and so forth. But we're up here. So we still have room to go lower, right? And again, that is strange for people, especially if you've always been the kind that doesn't short when there's equal highs. So what would also aid us with the dollar index? What are some other things we could utilize if we're looking at dollar index? What do you think it would be? Foreign currency. Okay, it would be foreign currency. What does the euro have? Monday's, well, today's Monday. I'm tripping. that was our current high of the day prior to this. And then we had Friday's high right here. Those highs together are what? Low resistance highs. $9.50, $9.55, 10, and then 10.05 was about right here. And I'm only pointing that out because that was the time of the screenshot. So if what we saw on dollar was a mitigation, what else did we see? And then there was an imbalance after that, right? We see the same thing here. Okay. Original consolidation. If this is going to be a sell model later, this is going to be left open. But we're going to get manipulation first. So current high of day up here. Right? I still got my tweets on there. And just to give you guys a follow-up, we never did trade below the 1680. So those lows never got ran. And that's okay. If anything, that gives you insight that it's extremely bullish because it's leaving the lows behind. Okay, look at that. Mitigation, right there. Imbalance slightly above it. We trade higher. Imbalance here. And then we actually get a real run above the highs. You see that? You see how easy that is to get in sync with price? Now, obviously, this you wouldn't have hit a banger. I mean, I'm not saying you would have got 60, 70 pips in this, but something like an entry here, or even like where I was screenshotting right there below the open in the 10 o'clock hour, you know, that's still 30, 35 pips offered in that. That's high probability. It's not low probability. That's high probability. Look at these lows down here. Those lows from Sunday. And then a London low here. That already got taken. Right? If the market's going to go higher, it's going to go lower first. We already saw that. Right? So yeah, just like last week, it may be a little bit late in the range. Some people may not like that. But remember, it's not always about like super high RR or like low risk buys and low risk shorts. Sometimes it's just about getting in sync with price. You know what I mean? So, do you guys have any questions so far? It's really not all that difficult. You just got to fucking look at it. AUD. I didn't give this to you. I didn't call this out in advance. It was just something that I watched. Okay. Unfortunately, I didn't participate in Australian dollar. But even though euro went higher, there were better opportunities in other currencies. So Aussie to me had a much better play here. And I'll just speed run this for you. If you look on the weekends, okay, we're going to talk about more about the weekends here in a minute too. But what did I tell you last week about weekend analysis? Your analysis, right, when you're looking at charts, the most amount of time should be spent on the weekly, daily time frames. That's why Saturday is so awesome. Friday, we do close and you do have the rest of Friday night, whatever. Saturday, you have the entire day. Sunday, you do have like maybe the first half of the day. Maybe some of you go to church, or some of you should go to church. But you also have Sundays open. So Saturday is the perfect day because there's no rush to wait for the market open. And if you took a loss on Friday, hopefully you're over it by now because it's a new day. So Saturday is a perfect day for higher time frame analysis. Weekly, daily. Then we can drop down to a 1 hour. So what was real simple from Friday, London, Australian dollar, okay, AUD, USD, equal highs right there. We had traded lower and lower and lower. This in here, okay, and again, this is why I speed run things because I've already done like all the analysis and stuff. Those lows taken on the 23rd, and then this would be a potential reaccumulation. So yeah, it takes a few days to pan out. That's okay. Patience. So that's where these levels come from though. June 12th, that Thursday, the close and the open, right? That up candle extended that over. So when you drop down to and that's why it's a different shade of orange as well. So you understand like this is a daily reaccumulation. We go to the discount end of that on Friday. Sunday opens, very small gap, no big deal. We retrace. I think these are Asia lows. We trade higher. Okay. It looks like it's going to go for those highs, but not yet. Right? If it's going to go higher, typically does what? Goes lower first, right during London. Okay. Bro, I've said this for almost a decade by now. London is the finesse session. London wrecks US traders all the time because we're asleep. 2, 3 a.m., 4 a.m., we're asleep. London manipulates like nobody's business, man. And that's a good thing. That's a good thing. Okay? So we still have those highs here. We trade below Sunday Asia lows. And we also dip, right? How far can price go below a low? An imbalance or a gap. Oh, look at that shit. What's our low of the day for Australian dollar? London, below an old low, inside of an imbalance, in a discount. Based on, well, if you took this high down to this low, that's absolutely a discount. Right? This was one idea I introduced, man, I don't know how many, like 5 years ago. I was at a house event here in Houston. And I don't talk to these people anymore for whatever reason. I don't know what they do now. But they were asking me questions and all this shit. And then I got a really, really good question. This gentleman came up to me and he said, John, how do you know which concept to trade? And I said, that's a good question. Now, I don't necessarily believe this anymore, but at the time I said the best concept to trade is basically smart money efficiency. That's just what I call it. Okay. And so to me, smart money efficiency is taking out traders and rebalancing price at the same time. 2 birds, 1 stone. So that low, right? Traders are getting knocked out, and then this imbalance gets, you know, quote unquote rebalanced, especially inside of this inversion as well. So taking out traders, rebalancing price at the same time. Beautiful. Rallied, retracement, down candle here, rallied, 845. We get one more pass lower. We end up pushing through that, and then I think this, right? 1 hour. That low was taken here. So that up candle, what does it do? It gets traded through at 9 and then 10. Remember the time of the screenshot was 10:04. Look at 10. What does 10 do? Corvette candles coming through, right? 10 o'clock trades down below the open of 10 a.m. and then launches right for those highs. What's above that? Is there an imbalance there? No. What's the only other thing there? Thursday's high. Boom. And then that is 56, or sorry, I'm dyslexic. 65, 63. So then 10 points above that would be 73. We end up getting an extension right there, which we pretty much just traded into a few minutes ago. So I know it may seem like a lot, and I try to speed run you through this stuff, but that's top-down analysis for you. That's understanding dollar to understand foreign currency as well. If dollar is going to manipulate lower and everything else is set to go higher, well, then fuck. There's your short on dollar index. If you can't trade dollar index, then go trade currency. If you can't trade currency, trade currency futures. Half of you are funded anyway. That's scalping opportunities in here. Yeah, it seems late, but it's high probability. That's like the biggest key here. Yes, it's late, okay? It is. But look at the response on that. Remember that Tuesday trade from last week on ES I showed you? It was like it's a little weird because you're like, what the fuck? That's such a shallow retracement, and then it just takes off. Right. Bullish markets don't retrace deeply. Bearish markets don't give deep retracements either. It's extremely bullish. It has no reason to trade back down here. No reason to trade down here either. That 1 hour mitigation is here. It has no reason to trade here. So what's the only other option? Higher. Easy. Easy. Speaking of easy, I just came from the easy tag place. Right? Easy tag, easy trading. What else do you need? You know what I'm saying? So anyway, Cyber Snake, I don't know what candle you were referring to because I saw that a few minutes ago. But what's good, Jonas? What's good, Smooth G? Can we check out gold? Honestly, I think gold is shit. But I will tell you, I did like the highs though. I think this was last night. This had nothing to do with today. I don't think. I like these highs. I don't really trade Sunday Asia, but if I did, that would have been the move. Sunday's open, trading lower, taking out Friday's low, retracement, inversion, imbalance, right? Imbalance below lows, smart money efficiency, done. Done. But, and then where we're at today, like, yeah, I don't know. Gold on the daily has been trading low for a while. I do like this intermediate term low here. But what is it going to do right now? I don't know. We just took out this high. London's high. So, I don't know. Couldn't tell you. Oh, shit. Sorry. I know I cuss a lot. One thing about gold, too. Again, I want to push this point here. higher time frame analysis, weekly, daily, okay? The only, I guess, real I don't know what fucking word I'm looking for. That low was taken out. Okay? That low from May 29th. That low here was taken out. It was taken out on Friday and came off of it. But Monday, earlier today, we went lower to actually grab that and then further below Friday's low. So taking out last week's low. So when we do that, right, something like this, taking that higher time frame low, that to me is what gives confidence for higher pricing. Yeah, to be fair, bro, indices today, I don't know. Personally, I wanted to be bullish, but we have retraced. Like this retracement here, I just told you bullish markets don't, like super bullish markets don't give deep retracements. We got a deep retracement here. I think that looks horrendous. Unless you were in from like low of day. But even then, that's a steep pullback. I just don't like what we're doing here. So I'll give you a couple more ideas and then I'll give you my special surprise for you. You guys good with that? Are you good with that, chat? Yeah, this looks like shit too, honestly. Those lows here are morning session lows. They're very clean. The markets do not look very strong. We could probably gravitate towards that. What I wanted this morning was to see potentially higher pricing. But, bro, we keep going up. Like, how many times are we going to keep going up, you know? So, yeah, that probably is going to be on the table. I just wouldn't trade here, personally. I just wouldn't. NQ, I mean, look at this, bro. Look at this. Look how long we've spent today in the 800s. 800, 840, and just stayed within that. Left it a little bit. Now we're back right inside that. This doesn't look bullish at all to me. So I can't do it. Can't do it. So, all right. So we do have like 60 people on here. Let me give you one idea and then I'll give you my special shit. Because it's cool. I think it's cool. Let me ask you this, chat. When we talked about trading within gaps, Sunday's gap, right? What is the stop loss placement idea? Or at least, because even if you don't trade it, analysis-wise, when we're working around a Sunday gap, where should price not go? Okay, let me be more specific. If we're above price, I mean, if price is above the Sunday gap, okay, and we trade down and into the gap, where should price not go? Who remembers? Where should price not go just based on the gap? Who remembers what the answer is? I need another case of Saratoga, man. This stuff goes quick. New here, hope to learn more. If you watch enough streams, you'll learn a lot. If people were not learning, people would not show up. You know what I mean? I got some cool jokes here and there, but people don't come for the jokes, you know what I mean? Jonas says the size of the gap should be your stop loss placement. Even said past the gap, the same size further. Okay, good enough. So originally in here, yes, But since I think indices are shit today, that may not be the case anymore. But let me give you this for your notes, okay? When we talk about stop loss placement, or at least analysis, meaning like, okay, we might trade down into the gap, but where should it not go? It's real easy. It's real easy. Whatever the range is, now this is from 241 down to 201. So that's easy. That's 40 points. The range, 40 points, extended below the low. The low end of the gap. Not the low end of the gap. So 241 to 201 is 40 points. So 201 minus that range of 40 goes down here to 261. You see that? To 261. So price should not go there. It shouldn't. Right? So if you're buying inside the gap, or maybe those lows, right? And then buying below equal lows, how do you know when to do that? Well, we have original consolidation and some equal highs up here, low resistant highs, but if we're buying that, okay, because a lot of people still don't know. They're like, oh, well, when you buy below old lows, you don't know what your stop loss is. You don't know what your stop loss is. I know what mine is, okay? It can either be based off of percentage, off of points, or like this, based on the range of that gap. Now, you might find some Sunday gaps, right? And you might be like, well, hold on, John, this is like an 80-point gap, and now I have to take 80 and drop it below. That's a big range. Right. If it's a big range, then don't trade it. If it's too wide of a stop, then don't trade it. It's that simple, right? Oh, Jonas, I didn't read your... I read your second one not knowing what the fuck you're talking about. But normally we should take the size of the gap, extend it, and then place your stop loss there. Or am I tripping and there was no concept? Well, hopefully I just explained that. Whatever the size is, you extend that lower. Or obviously, and that's why I said, look, if we're above it, trading down into it, it would be the inverse if we were lower. So let's say price was here, and then we started trading higher into the gap. No problem. It's the same thing. We would say, okay, if we're bearish, we can short inside that gap at the low end or even the midpoint. And if we're trying to, you know, show our ass a little bit, and you want to try and catch the high, where's your stop? That range of the gap extended higher, then the stop would be up here. And so you would anticipate like, okay, we may trade lower, run up one more time, and then trade lower. So maybe you got in early, weathered the storm a little bit, not concerned because you're managing risk and not being a dumbass and over leveraging. And then boom, market goes lower and all is well. Because that's pretty much what happens in here. Again, as live price, I may not feel that way anymore because, again, like I said, SPY has AM session lows as low resistant lows. It kind of looks like a very shitty market maker sell model. I can't justify risk, honestly, on that. But this is all new information because this is 12:45 p.m. This trading in Sunday's gap was like earlier this morning. This was at 10 o'clock. So at the time, it's like, oh, well, shit, this might be a buy model, right? It might do what it did last week, I think on Wednesday with NQ. Remember, kept grinding lower and lower and lower and lower, and then it popped. Then we retraced, gave it to you in the Discord, then we rallied. Remember that? That could be doing something like that down in here. And there's Sunday's gap right there. There's Friday. There's our open. See that? That's where that range is from. So trading in that, yeah, stop could have went down here. Did it ever go there? Nope, not even close. Then we get that 1 minute reaccumulation. That's what I showed you here. Well, mitigation rather, but whatever. Okay. Then the market offered a new high. Well, on this retracement, technically a new high there, but a new high right there and a new high up here. So it did give you multiple opportunities to partial. Okay. Doesn't always have to get to the highs. And in today's case, it may not. But when you're in and then you can get out on the way up and then go break even on the rest, that's when partials put you in the green. Okay? So when you're trading around gaps, if you're comfortable with the range, because obviously the bigger the range, the wider, that particular stop's going to be. There you have it. Whatever the range is, extended above the gap, if you're bearish, or extended below the gap if you're bullish. All right. So I want to watch SPY, honestly. I really would rather not watch any of this today, but I'll still give it to you. We will watch the 1 p.m. macro, and then that'll be it. Okay. So let me get rid of that. It's taking up computer space. Okay. Are y'all ready for your gift now? I will drop the PDF in the Discord a little bit later, but I'll walk you through some of it here. Okay. So I made a PDF for you, okay, to give you a little bit more structure. Okay, because remember, structure limits chaos. I've talked fairly extensively the last couple of weeks talking about the weekend. The weekend is good for reflecting on the week, reflecting on performance, spending time on higher time frames. So that way Monday morning or whenever you get to the charts, maybe a Sunday night or Tuesday morning or some shit, you're not going to be lost in the sauce. And then you're taking, some shit trades because you didn't do higher time frame analysis. So what I created for you is, instead of a checklist of confirmations, manipulation and this entry model or whatever, instead of that, it is a weekend reflection. And this is broken down into 4 parts. I don't know how I fit it all on one page, but it's broken down into 4 parts. So there's strategy, risk management, and psychology. And then there's like a 6 set of final reflections. Okay. So this is what it looks like. Are you ready? Drop some ones in the chat if you guys want to go over this a little bit. Okay. This is something, it's 1 page. You can print it out. Right? You can print it out. You can print as many copies as you want. You don't have to buy a notebook. You don't have to buy this. Okay? My community will get the PDF later. Now, if this is a live stream for you and it's free, you're just going to have to write this shit down. I'm still giving it to you, but I ain't going to give you the PDF. Okay? I'll be nice, but I'm not going to be that fucking nice. You know what I'm saying? Okay? So these are weekend reflections. You got the date up here, 6. Well, the next one technically would be, if you do Saturday, that would be the 5th. So this would be July 5th, 2025. All right. So I guess we can't really watch S&P, but that's fine. So again, this is broken down. So under strategy, because remember there's three legs, right? Sort of like a MLM. You know what I'm saying? 3 legs, baby. You got your strategy, your risk management, and your psychology. So that's exactly how I broke this down. 1 part is for strategy. The other part is risk management, psychology, and then some final. But I want to go over some of these with you, okay? So it's real simple, real easy. Saturday, you wake up, or maybe it's the evening time, you pull this bad boy out, and you ask yourself some of these questions, all right? Did I follow my trading plan every day? Yes, no, whatever. Were my setups clearly defined and consistently applied? Answer it. Okay. Ooh, that brings me to a really good point too. This, I believe, will help you, but this will only help you if you're honest with yourself. If you're not honest with yourself, if you bullshit your way through this, you're not going to be doing this correctly. But if you do this right, I really believe this will help you improve in the long run, especially if you do this every Saturday. Okay? Was I trading during the best hours for my system? If you like New York and you go and you trade London, you know, it may work, it may not work. That's up to you. Did I take trades based on signals or gut feelings? Was good, Edward. Thank you, Grok. Appreciate that. Did I take trades based on signals or gut feelings? Was it a low risk buy, or did I just want it to be a low risk buy? Was it the mitigation model, or did I just want it to be? Or did somebody on Twitter say that they're bullish or whatever? Did I respect my entry and exit criteria every time? You know, when you move your fucking stop loss, if you widen your stop loss or you start moving your TP, you've seen me do that, but you know, wrongly. Like if you're trying to, you know, get equal highs and then, oh, I'm going to be greedy and add another 20 pips or 20 points on top of that. Like, all right. You know what I'm saying? Did I respect my entry and exit criteria every time? Was my analysis, whether it was technical, fundamental, okay, I'm mostly technical, but whatever, accurate in hindsight? We do have some fundamentals, interest rate differential, seasonality, you know, stuff like that. But overall, you know, what was it right? You know, and that's where tweets come in. That's where stuff like this comes in. You know what I'm saying? Take before and afters. And guess what? I could have been wrong as a bitch and this could have went higher. And then guess what? I would have been wrong. And I would have said, okay, you know, what did I miss something? You know, was there a divergence, or, you know, what did I miss? You got to figure it out. That's the fun part. May not seem fun to you, but this shit is fun. What was my win rate and risk reward ratio? Are they favorable? You know, maybe you had a good win rate, 60, 70, 80%. Maybe you took 2 trades, won both, and got 100% win rate. Okay. And then what was the RR though? You know, if your RR is like less than 1, probably not good. You know? So it may be something to work on. Okay. Do you guys want to go over a few more of these? Because we're pretty much getting to the end of the session today. Do you guys want to go over a couple more of these or no? Are based on the money in the end or based on the range? So this is what, like, so for all of you that have XFAs that trade with Top Step, right? Like the Top Step XFA shit. If you have those, you can look at your analytics and it'll tell you all that stuff. So you don't even have to figure it out. You can just look at it. What was my RR? What was my win rate? You know, if your win rate was 30%, 40%, you know, may need to work on that. If your win rate was like, I'd say like 50% and above, you know, it's favorable. Anything above like 60, 70% is solid. But I'd say favorable is probably 50% and higher. Anything less than 50% to me is just, it's not good. I think it can be improved. But again, that's just my opinion. So Any other questions besides Felix? Any other questions? Oh yeah, see, we went right back into Sunday's gap. That's ass water. And some volatility here at 12.55. Interesting. Interesting. Well, 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 chat. Wrong again. Wrong again. Look at that shit. Didn't I say this was weakness? Didn't I say that was SPY? Morning session lows, and we just ran that bitch. Come on, man. This shit is cake. This is cake. This is easy. Directional bias is so easy. Now, mind you, again, I said I wouldn't trade that personally. But you got some experience. I point to where it's going to go, and it goes there. Price just sort of bends the knee, don't it? It's all about probabilities. Probabilities. Right? Oh, look at that. New low of day, right? Come on. NQ took the lows as well. Now we may end up trading above these highs, but again, I just don't like it. I don't like it. I just don't have good vibes, you know what I mean? How about some vibe analysis? I'm not getting good vibes from this. That's okay. What's good, Lee Bright? Wow, Alex, thank you. But listen, it's not that difficult. Once you got your tools, right? You got your market maker models. You got your top-down analysis. You got some questions. Where is it at right now? Where is it going? Where is it coming from? If it's not going to do this, it's probably going to do that. Right? That was simple. We got some equal highs. I think we could go up there. We don't. And this is shit. Okay. Bullish markets should not give super deep retracements. Are we rallying at all? Not really. And then on top of that, I told you a minute ago, SPY, right? Look at that. Look how clean those are. You're telling me we're going to long right below those equal lows? Absolutely not. Absolutely not, baby. No, because that's where the stops are. Whew. We just took that shit. Look at that wick. How hard is that? How hard is that? Quite frankly, it's not that fucking hard. Okay? It's not that hard. So in hindsight, right? What was the opportunity? Dude, in all fairness, I don't even think there was an opportunity that I really care for. I would say something like this, and the only reason I say that, and most of you would actually learn to appreciate this if you study this enough, concepts inside of concepts, even if they're inverted. So what I mean is, on a 5-minute, you have this down move and then this up move here, right? So that becomes a mitigation. Now that's a fat mitigation. That's a big ass range, right? And the only way to combat that is to take that concept and then find like an inversion inside of that. So I think this would have been an okay short. But look at that. That wick here may have taken you out if you went break even too quickly. If you left your stop, like it say this high or maybe even way the fuck up there, there's an opportunity you would have been able to weather that. But again, I told you right at the beginning, I wouldn't frame a short. I can't put risk behind that. I still believe it'll go lower. Would I put money behind it? I didn't put money behind it, but it still took that. Now, it's fucking 1 p.m. Oh, yeah. Didn't I tell you we'd watch the 1 p.m. macro? They say, there's no algorithm that runs price. There's no algorithm that runs for retail stops. Well, then why did I tell you we'd be watching the 1 p.m. macro and the lows? There's no algorithm that runs stops. Sure. But yet I gave you the time window and the price that it would do it. Again, chat. But remember, it's all random. Nobody knows. It's all probability. Well, that's true. It is all probabilities, but am I 50-50, chat? If you look at my tweets, if you look at my live streams, am I a fucking 50-50 here? Come on. I don't think so. What happened to my shit? Oh, there it is. Okay, I'll go over a couple more and then we'll shut it down. Right? Giving you lessons and teaching with live price at the same time. How's that for efficiency? Where did we leave off? I think strategy. We'll go over a couple risk management and then that's it. Risk management. Did I stick to my position sizing rules? Were there any trades where I over leveraged or deviated from the plan? I think it's better to under leverage than to over leverage, unless it becomes a problem. How much did I risk per trade on average? Now this, obviously you could write dollar amount, you could write percentage, you know, whatever you want. Okay. This is for you. And honestly, if you like this, you can keep it. If you don't like it, you can always make your own too. You don't have to just take what I give you. You can make it your own. Okay. Did I cut losses quickly or let losers run? Did I enter positions with discipline or recklessness? Ooh, that's a big one, right? You can't just be in here YOLOing into trades. Okay? Sometimes it looks like I might do that, but it's not. It's based off of something. It's not just YOLOing it. Okay? It's discipline. Did I hit my max loss limit any day? And if so, did I stop trading? Now, again, that's a lot easier when you have an XFA because Top Step has auto lockout. So you really have no choice anyway. If you get locked out, you're done. You can't change that. Right? So that's easy. A couple more. Did I experience any revenge trading? Right? How did I handle drawdowns emotionally and financially? And what was my total P&L? And does it reflect good risk habits? Okay, and that's all you get. That's all you get today, baby. But like I said, the members, once the stream is over, I'll drop the PDF into our Discord so you guys can have it. All right? So, again, just like I know Friday, I think a lot of you said that was a really good stream. I think one person said that was probably the best stream I've ever done, which is great, and I do appreciate that. But you got to do some weekend reflection, man. You got to do some journaling too. And this guide hopefully is going to help you, but you have to answer it honestly. Okay? If you're embarrassed about your results, maybe you're on a losing streak. Maybe, you know, fuck, I don't know. Or maybe it's just straight up embarrassing. You're like, oh, I don't want anybody to see. Then it's not for anybody else but you. It's not for anybody else but you. Okay, print it off, write in it, put it away, or maybe just throw it away if you want. But at least go through the process. Find your weak spots and then work on those. Okay? So with that being said, thanks again for 10,000 subscribers. I appreciate that. That is the highest amount of followers I have on any social media at all. I thought it was going to be Instagram, but it's not. What the fuck? What happened to my shit? I thought it was going to be Instagram. It wasn't. So YouTube is where it's at. I greatly appreciate every single one of you. And that's why I'm giving you this document, right? Weekly reflections. That is my gift to you. All right. What, Jorgs, I don't understand your question. I just made this PDF a few days ago. I made it for you. Now, I've answered similar questions in the past, but not like a complete breakdown of strategy, risk management, psychology, and there's some general ones in there too, which I think you'll like. All right. So y'all be good, be blessed. I'll see you again tomorrow on Tuesday, the 1st of July. It's already July, baby. It's already July. The year is halfway over. All right. So I feel like Q3 is going to have a lot of good setups too. The end of Q2 has been nasty. We've seen some nasty setups this month, especially last week. All right. But yeah, be good, be blessed. I will see you guys tomorrow.
From